Welcome, curious minds, to another deep dive. Today, we're plunging into a world that's, well, often overlooked but incredibly dynamic. The domain name market, those digital addresses that guide us across the internet. It's far more than just picking a name for your website. It's this vibrant, multi-million dollar industry, and it's seeing some truly fascinating shifts right now. We've looked at a whole stack of sources, detailed industry reports, real-time social media stuff, all current as of July 27, 2025, to bring you the important nuggets.
Absolutely. Our mission today really is to uncover the key trends, those eye-popping sales figures, and some surprising transformations happening in digital real estate. We'll dig into why old favorites are sort of making a comeback and how new tech is forging completely new frontiers.
Right.
Get ready for some genuine aha moments, I think.
Okay, so let's dive right in. The fascinating numbers behind this market. What's the pulse? What's the overall health right now? Are we talking boom, bust, or just, steady?
Well, what truly stands out here is the sheer scale, first off, and the consistent expansion we're seeing. As of the end of Q2 2025, the Internet hosts a staggering 371.7 million domain name registrations.
371 million. Wow.
Yeah, it's huge. And this isn't just slow growth. It feels like an accelerated demand. Quarter over quarter, it's up 0.9%,
Okay.
which might not sound like much, but that's 3.3 million new domains.
In just one quarter.
Exactly. And year over year, it's up 2.6%, or 9.3 million new registrations. It really signals that, even now, securing your online real estate is becoming even more fundamental.
So it's not slowing down despite how mature the internet seems.
Not at all. And if we zoom in on the classics, .com and .net dashes, combined, they total 170.5 million registrations.
Still the lion's share then.
Definitely. Now, they did see a slight year-over-year decrease, about 0.1%, which is tiny. But quarter over quarter, they actually increased by 0.4%, added about 0.7 million registrations, and new registrations for these classic ones. Pretty strong in Q2 2025, 10.4 million, up from 9.2 million the year before.
Interesting. So even the old guard is growing quarter to quarter.
Right. And then you've got the country code top-level domains, the CCTLDs, like .de for Germany or .cn for China. They're also showing consistent growth. They're at 143.4 million registrations now, up 0.4% quarter over quarter and 2.5% year over year. And the top 10 includes big players. .cn, .e, .uk highlights significant regional activity. It's not just growth. It's a clear signal the digital land rush isn't slowing. It's just getting maybe more sophisticated.
Yeah, that makes sense.
And that kind of leads us to one of the most surprising comebacks in this market.
Okay, those numbers paint a picture of impressive overall growth. But like you said, within that, there's this really intriguing story, the resurgence of .com. For years, we heard about all the new extensions, .xyz, .app, whatever. But .com is really flexing its muscles again. What's driving this unexpected revival?
Yeah, it's fascinating. The comeback of .com seems to boil down to about four main reasons, which give us some crucial insight into the market dynamics right now. First off, improved renewal rate.
Ah, okay. People are holding on to them longer.
Yes, exactly. The preliminary renewal rate for .com in Q2 2025 jumped significantly. It's up to 75.5% from 72.7% the previous year. So more existing holders are choosing to keep their digital property.
Yeah.
That directly expands the base. It shows businesses, individuals, they see lasting value in that .com address, right?
Makes sense. It's still the default in many people's minds.
Totally. Second reason, adapted marketing programs. VeriSign, the company running the .com infrastructure, they've tweaked their rebate programs for registrars, the companies you buy domains from. These programs are now based on registration targets, so it heavily incentivizes registrars to actively push and register more .coms. It aligns their goals.
Ah, so they're getting kickbacks for selling more .com specifically.
Pretty much. It's smart business pushing more .coms onto the market. Third factor, registrar focus on customer growth. We're seeing a strategic shift among registrars themselves. Instead of just focusing purely on profit margins per domain, they're now prioritizing acquiring new customers, even if it means slightly lower initial margins.
Get them in the door first.
Right. This customer-centric approach fuels new .com registrations, brings more users into that .com ecosystem. And fourth, growth and recovery in key regional markets. The Chinese market, specifically, now counted in the Asia-Pacific region, is showing really strong signs of recovery. And that's significantly contributing to the overall growth of .com domains. This regional resurgence plays a huge role. It shows how interconnected it all is.
Those four factors make a lot of sense, especially the incentives for registrars. That's quite direct. But I'm curious about that improved renewal rate. Is that purely market-driven, just people deciding to keep them? Or are there also maybe strategic efforts by VeriSign to reduce churn? Like, is there a risk some of this growth is just existing players holding on tighter rather than genuinely new expansion?
That's a really excellent point. And while market sentiment certainly plays a role, people value .com, it's not just renewals. VeriSign, in fact, predicts a 1.2% to 2.0% increase in the combined .com, .net domain base for 2025.
Okay, so they're projecting net growth.
Right. This isn't just about renewals. It applies new registrations are pushing that needle. The combination of those incentivized registrars and recovering global markets suggests genuine expansion, not just retention. Their confidence implies a belief that, yeah, new entities are still coming in and choosing .com.
Got it. So the classic .com isn't going anywhere. It's proving its enduring value. But if we're talking value, we absolutely have to talk about the money-changing hands, some truly eye-watering sums in the secondary market. What are the hot properties right now? What's commanding top dollar, and what does that tell us about current trends?
Yeah, the secondary market's been, as one source put it, particularly active recently. Shows a really robust market for these valuable digital assets. So the top reported sale for the period July 7th to July 20th, 2025 was Ferienhaus.de.
Ferienhaus, German for holiday home.
Exactly. It sold for an astounding $421,260 on CDO. That's a major marketplace. Domain Name Wire also reported it, slightly different figure, $420,000, but basically the same huge number.
Wow, for a .de domain too, not even a .com.
Shows the strength of CCTLDs in certain markets. But there were big .com sales too. Footage.com went for $300,000.
Makes sense. Generic, valuable term.
Right. Then Crypto.bot for $250,000, AITools.com for $238,000, and Sim.ai for $220,000.
Okay, wait. Crypto.bot, AITools.com, Sim.ai. I'm sensing a theme here.
You picked up on it. What's really intriguing, what stands out among these top sales is the notable emphasis on .ai domains.
The AI gold rush hitting domain names.
Absolutely. This isn't just, a passing fad. It signals where serious investment and maybe speculative interest are flowing. For example, Wander.ai sold for $95,000. Producer.ai for $84,000. F2.ai went for $65,000. And loads of others over $50K. District.ai, Valor.ai, Neura.ai, Ultimo.ai.
Precisely. It's branding in the AI space. And this trend even extends down the price scale a bit. There's this domain, Genero.ai. It just got approved as a premium domain. Approved price potentially hitting $21,250.
Okay, not $200, but still premium. Right. And while it wasn't in that specific top fails list for that period, its premium status and the buzz around it, like potentially the next big AI brand, it just underscores how adaptable the market is to these tech trends.
That's really fascinating. So we've looked at the traditional market, the resilience of .coms, this explosive demand for .ai. But what does all this mean for, the future of online identity? Because there's this whole other frontier emerging, right? Blockchain domains, things like the Ethereum name service, ENS. How do those compare to the traditional ones we've been talking about, and why should you, the listener, care?
Yeah, that's a crucial question. How do these blockchain domains, like ENS, fundamentally differ from traditional ones?
Yeah.
And why do their updates matter for the future? Okay, so traditional domains.com, .net, .e, they rely on a centralized system. ICANN, registries like VeriSign, registrars like GoDaddy, they serve as addresses for websites, email. Their growth, like we discussed, is driven by market demand, business strategies, economic factors, value tied to brandability, traffic.
This system we all kind of know.
Exactly. Now, ENS domains, total different beast, built on the Ethereum blockchain. This makes them fundamentally different in a few ways. They're decentralized. No single company or authority controls them. That gives users way more autonomy.
So VeriSign or ICANN can't just decide to take your F name away?
In principle, no. They're also censorship resistant for that reason, harder to take offline by a central power, and they're self-custodial. This is key. You, the user, have complete direct control and ownership via your crypto wallet keys.
Unlike traditional domains, which feel more like leasing from a registrar.
That's a good analogy.
Yeah.
Own the ENS name itself, like owning a token. Functionally, they act as human-readable names for crypto wallets instead of that long string of characters, but also for decentralized websites, other Web3 resources. Their growth, it's intrinsically linked to tech innovation in the blockchain space, dApp development, the expansion of Ethereum itself, and their value is tied to utility within that Web3 ecosystem, digital identity management, integration with dApps.
Okay, so different foundation, different purpose, different value proposition.
Totally. And recent ENS updates really highlight this focus on innovation and usability. For instance, There's a proposal moving forward to upgrade their underlying infrastructure, the indexing part. Think of it like upgrading the system's engine. They're aiming for significant scalability and cost gains, making it work better and cheaper for everyone.
So technical improvements under the hood.
Right. Plus, developers in the ecosystem are launching new tools, component libraries, UI wizards, browser extensions, making it easier to actually use and integrate ENS. They're also improving how decentralized content, like websites hosted via ENS, is managed and accessed, making sure data is secure and available on the blockchain.
More user-friendly, more robust.
That's the goal. And on the governance and security side, there's progress too. Beta delegation alerts, a live security council, trying to make it safer for users. There's also a big push to get other projects, Ethereum L2s, those scaling solutions, even meme projects, to use ENS subnames, like project.mywallet.eth.
Integrating it deeper.
Exactly. Embedding ENS more deeply into the whole ecosystem. Oh, and a practical reminder for current holders. Renew your ENS domains, especially before any potential ETH price hikes make it more expensive.
Right, because you pay renewal fees in ETH.
Yep.
Okay, that distinction between centralized and decentralized is clear, and the idea of user control, self-custody, that's compelling. But practically speaking, what are maybe the downsides or the challenges of a decentralized domain for the average user right now? Is it more complex to manage? Less universally supported? Does it carry different security risks than, say, my.com? What should you be aware of?
That's a very fair and important question because while ENS offers these unique benefits, it definitely comes with a different set of challenges today. For instance, that self-custody aspect. It's a double-edged sword. It means you are entirely responsible for securing your domain. If you lose your private keys to your wallet, you could permanently lose access to your ENS name.
Ouch. Unlike with GoDaddy, where you can probably reset a password.
Exactly. There's no central help desk to recover it for you. Yeah. That responsibility is entirely on you. Universal support is another thing. It's growing fast. You see more browsers and wallets supporting ENS natively, but it's not yet integrated into every online service the way .com just is. You can't always use your .eth name everywhere you'd use email, for example.
So adoption is still catching up.
It is. And the learning curve, honestly, for managing blockchain assets in general, it can be steeper for newcomers compared to just buying a domain traditionally. So, yes, it offers incredible freedom, censorship resistance, true ownership. But right now, it demands a higher degree of user responsibility and, frankly, technical literacy.
It's a trade-off, then.
It's a trade-off, absolutely. And it's one that's evolving really rapidly as the tech improves and becomes more user-friendly.
Wow. What an incredible journey, really, into this world of digital real estate. From the surprising resilience and robust growth of classic .coms driven by smart strategies, market recovery, to the staggering sums being paid for premium domains, especially those signaling that huge interest in AI, it's clear this market is thriving and adapting like crazy.
It really is, and we've only just begun, I think, to see the real impact of these blockchain domains like ENS. They're defining entirely new forms of digital identity, digital utility. So the market isn't just expanding, it's genuinely evolving. It's creating these parallel yet distinct ecosystems for online presence and value. You've got the familiar stability on one side and this cutting-edge innovation on the other.
So thinking about all this, what insight are you taking away from this deep dive? Given this rapid evolution we've talked about, what implications do these shifts in digital real estate have for how you might secure your online identity or your brand in the coming years? Are you thinking purely traditional established web presence? Or are you starting to consider these emerging decentralized platforms too? How do you weigh those trade-offs we just discussed, established stability versus that cutting edge, maybe riskier autonomy? Keep exploring that question, and we'll see you next time for another deep dive.